All right, so we're going to go into our next session before we go for our lunch break itself. So lunch break will be at 12:30 Singapore time. Now, do note again, I do have a lot of friends from different part of the world joining into this event. So that's why I keep on having to use the word Singapore time, even though I'm in Singapore right now. Okay. All right, so let's just look at the next topic and see what to talk about. And that will be the MA itself. Let's go. Okay, guys, so we have covered again what is the OP rule intensively. Above OP, we buy, below OP, we sell. We covered the importance of MLP, especially when you get triggered. We covered the importance of knowing CCRY and CCYR. Okay, and then after that, we talk about the daily KTR, which is a standard deviation. That's for TP, yeah, taking profits. Okay, then we talk about the power of the pivots. Now, pivots is really a very powerful technique that I create back in 2011. So once the market is above pivot one, usually the market will go all the way up, and it goes below pivot two, it go all the way down. All right, so we have a bit of time. I share a bit of story here itself. There was once I was in Indonesia many years ago. I wanted to make some pocket money from the crude oil, and I did make some money already. So when I was about to leave my home itself, I mean my state hostel, right? I happened to see market crude oil breaking up, and I know that crude oil itself is going to go up already. So by right, I should buy, right? But because crude oil from the time was about $50, went to $70, I think it was a bit expensive. So I itchy backside, I decided to short crude oil. But remember, it was above OP and pivot one. So I went in to sell crude oil because I think that I'm a better trader. I think I can control risk, and I think that it won't go up, right? And truth be told, the market slapped me so hard because that day crude oil went up by $5. Another $5 itself on a single day. That's almost 8%. And I mean, that was crazy. It just keep on going up all the way for no reason. And basically, from winning money, I turned to losses. So imagine that I was supposed to party. Instead, I actually didn't go because I was losing money. Don't feel like going out anymore. Okay, so guys, remember this, never fight the pivot. Okay, remember that, yeah? Okay, so let's just look at the next one. It'll be the MA30 and MA200. Now, what is this? Now, I realized that in my classes, this particular subject, right, is always forgotten by people. Don't know why every time when we talk about this subject, people forget about what we taught here itself. Very sad. So let me show it to you right now. Okay, now let's take a look. Now, we know that traditionally, moving average is like this. All right, linear charts that come from the market. Okay, the linear lines. Now, why I don't like to use this one? Because first of all, it will influence me. It will influence my directive for the market. It will influence me when I see the line is moving. Every moment the price move, the moving average also move. Now, it's nothing wrong by concept of this. If the market is moving, by right, the moving average should be moving. By right, the concept is not wrong. But then again, when I study deeper on moving average, I realize that when the market is moving and the price is moving, my train of thoughts also moving at the same time. So it become a bit confusing. So what I did is simple. Listen here, everybody. I take the same moving average that everybody use, okay? And then instead of it moving, I fixated it into the chart. So let me show you how does it do it. Okay, so first of all, do you see there's a moving average here, which is a MA200, right? So how I get this number, let me show it to you live. Okay, it's very simple. Take a look. So what I did was I have to insert an indicator, and the indicator itself is called oscillator, which is okay. Sorry, in this case, it's trend. All right, it's called moving average. Can you see that? Indicators, trend, then followed by moving average. Okay, so done. Now, in the moving average itself, right, there are for MT4, there are only four types: simple, exponential, smoothened, and linear weighted. Now, the one that I use is linear weighted. So it's basically moving average using the linear weighted. Now, this one is open secret, I can tell you, no problem. Okay. So after that is done. Now, you may ask then, why do you simple, exponential, and smoothen? Now, basically, I tried all of them. I backtest all of them. I realized that the linear weighted is the best. Now, of course, if you go to this trading view, they have more than what 20 over type of moving averages. Yeah, but MT4 only got 4. Hence, therefore, I can only test on this 4. So maybe there's other linear better moving average. I don't know. But at least now, among these 4, I chose the best. And I realized that every one of them can use on the MA200. So let me show you now. Everyone take a look, yeah? So I basically have 200 period, shift is 0, apply to close, and then the color line example, and I press OK. Do you see now? Can you see now? Straight away, I have the same thing. That means that where the market ends on the linear weighted is the same number that is over here. Can you see right now? So whatever is here as ending, this is the number. But the only difference is it stay there and it doesn't change the whole day. All clear? If all clear, press number 22 right now. Okay, so I delete away, yeah, so don't confuse me. All right, so let me show you how does this thing work then. Let me find one moving average that it works itself, yeah? Okay, give me a moment. Now, of course, I have all those charts that I can use to show you, but I'm trying to find one that is as is live, so they can let you see it live in the market. But if you cannot find, then I'll use my charts that I already prepared for you. Yeah, I'm trying to find live numbers for you. Okay, we found one right there. Can you see that? Okay, so what is happening? So of course you can see that there is a moving average MA200 over here, and the number is 12971. So what do we do with that? Very important. Now, what is moving average? It's an average of what happened over the course of how many bars you wanted to use. So in this case right now it's 200. So what I'm trying to say is when the market itself is traded as a 200 average, if the market basically stays on top of it, it's bullish. If you stay below it, it's bearish. But what is more concerning is when the market touches the MA. Wow. So by right, what will happen? So let's take a look, yeah? This is the moving average. So let's say the market basically do this. The market stays above it, it will go up right in general. But if the market suddenly during the day, it touches this. So once it touches this itself, yeah, what will happen? Right, once it touches this, that means the market has touched the moving average. So what will happen is the market will have to decide to continue to go up or start to really come down. So what happened is the market can choose like this or choose to be like this. Understand? So at this junction here, a trader must watch out for a few things already. Number one, once the market touches the moving average itself, right, what coloration to apply? CCRY or CCYR? All right, that is where you have to watch out for. And once the market touch there, that means big movement is coming in. Big movements coming in. So the system itself is very smart. The system itself will warn you when the market touches the level, the system will give you green color dots that will be peppered on the chart. So let's take a look here. So guys, take a look. Do you notice that there's a MA200 here, the same number, 12971, right? So this actually comes from the day chart that is port over to the intraday chart. So that means in the morning, when the market opening price was here, all right, I noticed that the MLP is at 13006. I also noticed that the MA200 12971 is nearby in the market. So very simple. We all know the fact, if the market is below OP, what do? We sell, right? Okay, so I do it slowly for you, yeah? So below OP, the color bar is red in color. So do we sell? Yes, we will sell. Now you notice that there's MLP here. So the first TP level can be here. But because it's below OP and it's below MLP, so by default, you can sell some more, right? Okay. Then it went down to very nicely to KTR minus 1. Very nice. The first TP is given. But interestingly, this particular candle, which is a very long tail, a dragonfly in a way, touches the moving average. Now, how do I know this is moving average, right? Because it's many multiple green dot. Now, green dot is by MA 200. The brown dot is MA 30. Okay. Now, you cannot remember this. Don't worry. Just make your chart smaller and then you can see the whole thing again. So you can see now on the right side, the MLP is here and the MA30 is MA200 is here. Can you see that? Okay. So now you know that they exist over there. And then what happened? Now take a look on the chart. Let's take a look. You notice that the market, the one of the candle, the tail purposely touches the MA 200. Straight away, the moment it touches the MA 200, a green dot will surface on your screen. A green dot will surface on your screen. So what does it mean? That means that the market has two choices, either all the way up or all the way down. Can you see that? All the way up or all the way down. The market has to make a choice. And of course, the choice was made by the system. What do you see? CCRY. Are we clear? Are we clear? Yes. So that means that the market has touches the 200-day moving average and the market choose to go up instead. So basically, the market touches the moving average. Green dot appear on your screen. And then you see what is the formation of the coloration. And in this case, it's CCRY. That's why the market goes up. All clear? If all clear, press number 23. Okay, all right, very simple, right? Okay, so you notice that the number throughout the day chart doesn't change. On the 5-minute chart, it doesn't change. It's just take a number. So like that is how we can do precise trading. And of course, again, jumping the gun a bit, if you notice a diamond at the bottom, bang, that is the best. You have the diamond at the bottom followed by the moving average being triggered, bang, CCRI, just buy. Now, one thing to note, guys, the app version do not have the MA30 or MA200. I repeat myself, the app version do not have the MA30 and MA200 because we realize that the computation itself is very heavy, so the app version do not have this MA30 or MA200. But of course, when technology improve and we improve, maybe we'll start to slot in the MA30 to MA200 into the chart. But as of now, the app version don't have it. Yeah, so it's only available on the desktop version. Okay, all right. So that is how it works. So I'm gonna bring you some example that I have for you to go let you take a look. So you don't waste time to touch this. Give me a moment. Okay, everyone take a look. This is a screen capture that I did previously on gold. So everyone take a look here itself. On the day of gold, the gold opens here at 3,007 and there was a MA30 here itself. So when the market is trading below the MA30, it will show you the word called short-term bearish. If the market is above the MA, it turn to short-term bullish. Okay? So let's take a look on what happened and see whether you can explain to yourself. Let's take a look. So remember, the MA30 was 3029.7, 3029.7. So this is what happened. Oh my God, take a look. Okay, so the market opens and trades up. And then you can see, wow, so many green dots. Wow, but it was just clustering everywhere. Now, why is that so many green dots? Because the market was just bouncing around the MA30. Then after that, the diamond came in. We draw a line across it, and the market either is this way or this way, right? But the market chose the downside. Now, this was the longest market touching MA30 for the longest of time for the entire morning till afternoon. Now, what can I do? If the market is not decided to go, we just have to follow it itself. But once the market have decided already, it move away from the regular band of movement, then of course you can see the market cascaded downward itself. All right. So of course, there's no way I can tell you it's going to go up or go down. I'm so sorry. A lot of you ask me, Cal, these green dots means can go up or can go down. I say I don't know, but I can tell you that once it goes, it will go quite a bit of distance. So usually, right, what I do is that if the market is doing this, I wait for a while, and then after that, if I see the market really start to move beyond the regular, this is a regular range, right? Okay, regular range. So if the market choose to go down instead, definitely the market should be able to go down more lah in this case. Can you understand this? So I repeat myself, yeah? The market was trading in a range bound over this whole period. Can you see that? So there's no indication where it will go. But since we all know that if the market decide to move, it's either all the way up or all the way down. So very simple. For me as a trader, I will know that if it goes down, the distance that it will go down will be something similar at the top one top. So once it breaks here itself, you can see the market coming down here. Agree? All right, if you understand this, press number 24 right now. Okay, all right. So that is the moving average. Now, I've not really seen two moving average going into a chart yet, not yet. So we'll take a look because for MA30 to MA200 to combine into one, that will take some time here to actually do that. Okay, so all clear, yeah? Very, very simple. Let me give you another example. Just give a moment. Okay, on there. Let me give you another example. Okay, here we go. Another example. Okay, so this is the Hang Seng. This is Hang Seng itself. Let's take a look Hang Seng. Hang Seng, as of that day, wow, the Hang Seng crashed down, right, because of the Donald Trump tariff with China. So what happened? Okay, let me go through the slow understanding here. So basically, the market was moving sideways for Hang Seng on a day chart. Then after that, the market started to lose below the MA30, which is when the market goes below the MA30, we know it's bearish already. Then the worst thing is that on the next day itself, right? Oh my goodness, the market gapped down. So it was below pivot 2, right? So below OP, below pivot 2 is already a sell. Next, it was below the MLP. Oh gosh, so it's a sell. But the problem is this, guys. The problem is the market has already gapped down by so much. The market was already down by 1,300 points upon opening bell. That means that the market was already gapped down by 1,300 over points. So a lot of people went in to buy because it's like, wow, 1,300 points, let's buy. Remember, never fight the OP rule. So what happened? The OP rule was 21,022. Can you see that? So the market basically gapped down by 1,300 points, the biggest gap down for a long time. But yet there was a MA 200 over there at 20,914. So a live incident, a student of mine asked Cal, if the market can stay above 20,914, will the market rebound? So I shared this with her. I said, look, the market gap down already, right? A lot, right? 1,300 points oversold, right? and there's an MA 200 there. I say, look, if the market can stabilize above 20,914, yes, the market will rebound. But if the market stays below OP and break MA 200 at 20,914, then I tell you, be careful, because there's no more support on this side. And based on the KCB, the next number is as low as 19,168. So I told her to be very, very careful. And then, of course, we all know that the indicators are all bearish, which you'll learn later after lunch. So what happened? Let's take a look at the 5-minute chart on this very poor thing. Take a look, everybody. So you can see that the market really gaps down on that day. And the MA 200 was there. All right, you can see it's below pivot 2. The system already put there must sell. Must sell. And then you notice the market trigger here, 4 green dots. So same thing, either this or this. All right. So what can I do? The bar is red, below OP is still a sell. So when the market recover a little bit here, you can see that CCYR, which is sell, boom, the market goes down, boom, market goes down, boom, market goes down. Can you see that? So that's why when you see the green dots, you should be very happy and follow the coloration. If it's up, CCRY. If it's down, CCYR. Are we clear? Clear? Press number 25. Now that means that we have asked you at least 20 over questions for this morning itself. So that is how we keep track on learning. That's why I need you to key numbers in, not yes and no, then you get lost. Right? And you can see over here, this is the powerful part of the system. Of course, later part, the market got rebound. Then you use the diamond again, you were able to trade. But remember, you are supposed to make money on the way down, not on the way up, because it's below OP. All right? So take note of that, yeah? So when you see green dot itself, right, please be happy with it and expect this or expect this. One way will definitely happen. Okay. All right, so that will be the MA 30 and the MA 200 in the most unique fashion, because traditionally when people do moving average itself, they just use it for the guidance of up and down. But for me, I give a specific number. As long as the market stay above the specific number, it's a buy or it's a sell already. So in this case, you can see that. Do we get notification on the green dot? Don't have. This green dot itself is not available on the app yet. Again, all these green dots thingy, we will slowly implement into the app later. So we only do the diamonds first, then slowly we will do the green dots, slowly we will do the rest. Yeah, it'll take some time. But definitely, that's why I say the app itself still got a long way to go. And I'm very, very sure once they're putting more and more stuff into that, it will create a sensation, just that it will take some time. Yeah, okay, all clear. Yeah, thank you very much for asking me that. But you can see the green dot is very powerful, really very, very powerful. Okay, all right, so that will complete my green dots and my MA over here. And time check now is 11:41 a.m. Singapore time. And we have some time till 12:30. So we have about 45 minutes before we go into the remaining part itself. So the remaining part, if you notice, right, there's split into 2 parts here. The KSI, the KCX, the diamonds, the KCL, KCB. Those are more intriguing part whereby it get very exciting. So please take lesser cups, lesser rice, lesser noodles, so that keep yourself fresh. Take some more proteins and some wake up vitamins if you need to. Then in the afternoon session, evening session, right, it's more about strategies and reward management itself. Yeah, that one is in the later part. Okay, so we should be able to finish by 5:30 p.m. Singapore time today. I think we should be able to do that without much an issue. Okay, so now I'm going to jump onto this. We have covered all the things that we need to cover this morning. I think there is no question. Now I'll ask you back. Anybody have any question pertaining to what you learned this morning? OP rule, MLP, colors, KTR, pivots, MA. So 6 of them. Anything that you want me to cover again, please key in right now. If you say got nothing to cover, key the word nothing. NOTHING, nothing. So I need everybody to participate. What do you really need me to cover again versus you don't think so? Then text nothing. Let me know. Okay, we had the first one, KTR. How about the rest? I mean, there must be an answer from everybody, right? Either you have something that you want me to cover, or you think there's nothing to cover. Or you have any questions that you ask me, please let me know. All right, and let's look at your question, your thing here itself. Okay, one more asking me, Vincent, what time do we use a tweet to chat? Okay, that's a good question, Vincent. I will come back to you on this one in the afternoon session. Yeah, that's a good question, Vincent. Remember that. Later, ask me again when we are done with the KCB. That means that once we have finished this part here itself, ask me about the time. Yeah, it's going to be very important. Okay, the green dots again. The green dots. Okay, why must I have a green dot again? Okay, never mind. Green dots. Joe, what green dots do you do understand? Which part are you don't understand? As in, how do we use the green dots? Or you don't know what the green dot means? I need to know more on that. Meaning on how to use it? Oh, okay. All right, how about the rest? Okay, all right. Okay, let me just do that again on the green dots. Okay, okay. All right. Okay, so let me just do on the green dots first, then I answer the KTR. Yeah, the rest of you, nothing, is it? Okay, excellent. Yeah. Okay, so I'll repeat myself. So what happened on this day on China? It opens at 13,028, right? Then you notice that there's a number at the bottom called MA200 at 12971. Okay, 12971. Okay, so that means the market is here right now. There's a moving average at 12971 based on the MA 200. Okay, so that is how you can see visually without, I mean, normally with a normal linear line. Yeah. Okay, so what happened? The market slowly open and then trade down all the way and it touches the moving average MA 200. So instead, okay, instead of that, when the market comes down, the moving average goes away from you. The way I structure this is that what the moving average comes from the last 200 days, it doesn't contain today's data. So when the market comes down to MA200, it will hits the MA200. All your time frame will have a green dot on it. So once there's a green dot on it, right, that means the market has triggered the moving average. So now once it triggered the moving average, there'll be only two directives, either up or down. So up itself, we use CCRY to buy. If it's down, we use CCYR to sell. Can you understand this? Okay, so let's just take a look at this example. GTH is the same thing as what Vincent said. Then David, what time to enter the trade? I'll share that later. Yeah, things have changed a little bit because of Donald Trump. Yeah. Okay, so can you see that again? I'm going to draw this again. Okay, so we know that there is a number here, which is the moving average number, 12971. So what happened? The market opens, go down, go down, go down, go down, and hits there. Okay, at this junction here itself, when you trigger, the green dot will appear. So the question you will ask, Cal, then can I sell here or not? Yes, the green dot is when the price touches the moving average, correct? Joe, correct. So once the market touches the 5-minute chart of any bars, touches the moving average, the green dot will surface. So when it happens itself, right, what will naturally happen? There'll either be heavier selling in this case, or the market will rebound. So in this case, the market rebounded. Why? Because you can see the CCRY surface on the 5-minute chart. And that's why the market chose to go up instead. So when you are selling the market and you notice that there's a green dot here itself, right? There's going to either go see heavier selling or you see a market rebounding already. So this is very, very important. Can you understand this right now, Joe? So I repeat, when the market hit the MA30 or hit the MA200, there will be a green dot. And once the green dot surface, you must take a decision to either go long or go short based on the coloration that you see on your screen. Okay, all right. So if you are short, then maybe you want to buy back some. If you're long, then let it run. Okay. Okay, so very clear. Thank you. All right, next one is a KTR. Okay, KTR again. Okay, no problem. Uh, Katet says that so do we take the first color change? Yes, indeed, the first color change after it trigger, you can try. But remember, this on the Go chart, right? The market consolidated for a long period. I think for 5 hours, CCRY, CCYR, CCRY, CCYR. It took a very long consolidation, and that is where you may get some hits along the way. So that's why it's better to, sometimes we see this MA happening. If you have to move, you just follow. If it's sideways, just hang on for a while until you see the real momentum moving. Okay. All right. So KTR. Okay, like again, so what's KTR? Remember, the opening of the day starts already. The maths formula is that you take the OP of the day, multiply by a formula to generate this thing called KTR. Now, actually, this concept comes from the turtle program called the ATR, the average true range. What they do is that they take the last 30 days, 50 days, and take the range of the high and low to regenerate the potential upside and potential downside of the market. But of course, ATR is all right. It works, sometimes it doesn't work. So what for me is within the same concept here is I change the KTR, my name, average range, but instead of the day chart, we put into the 5 minute chart. So please remember, KTR is not available. It's not available for the day chart. Yeah, Angela, the difference between blue diamond and fall diamond will be after lunch. All right, the diamond itself will be mentioned after lunch, not now. We try to get the basic first. Yeah, I know everybody is very excited about the diamonds. After lunch, we'll do that. Yeah, no worry, Angela. Okay, so again, I repeat my KTR here as well. So once the market stays above OP, what do I do? When it's above OP, look out for CCRY or at least yellow bar. If the market is below OP, look out for CCYR or red bar. So let's take a look over here, my friends. Okay, so take a look. The market, here's OP of the day. The market opens. This is a red bar already. So of course, you don't need to hunt for CCYR to short because it's below OP already, right? Below OP already, right? You sell. So your first sell, remember the KTR is the first target. So KTR -1 is the first target. So you see the market really exactly came down to KTR level 1. Okay, so can we use KTR as a resistance and support? No, cannot. KTR cannot use for resistance or support. It's more for target. So when you sell something from the OP, you use it for targeting. When you buy something, use it for targeting. It's not for resistance and support. By right, it doesn't work because it's more for what will happen next. So it's like a follow through thing. Because sometimes it can go all the way to KTR +3 +4 +5, one whole traffic up. So it's not, yeah. So I must be very, very precise to you. It's only for TP. Yes, correct. Joe is for TP as well. Vincent, take note, yeah. It's only for TP level. Okay. So when you are selling something and the KTR is not triggered, then very good. Very high chance you'll see that. Yeah, you'll see a high chance of seeing that as well. So you can see that when the market stays above OP instead, the market goes for the KTR +1 instead. Yeah. So got it? So as long as the market stays above OP, you aim for KTR 1, 2, 3. If stay below OP, KTR -1, 2, 3. But it must cross and stay above KTR +1, then it will generate to the potential +2. But of course, the probability will drop as it climbs. Okay, all right. So that's why you see us trading a lot on KTR +1 or -1 every morning. Okay. Joe, so area of trade is OP, MLP, pivot, MA 200. Okay, we still got more to go, Joe. We still got more to go. But at least now the fundamental basic is there. Above OP is buy, below OP is sell. How to buy? CCRY or CCYR. Then the MLP, the MA30, the MA200, the pivots are all technical level for you to see if there's going to be any rebound trade or pierce through trade during the day itself. Okay, All clear? So OP is a main rule. The color change is what you can do. The techniques you have, the MLP pivots, MA30, MA200. The TP level is all the KTRs, +1, +2, +3, and -1, -2, -3. Okay? All clear? Okay, very good. So we've done a pretty good summary over here as well, yeah? Okay, so any more question? I still can still answer you. All right, let's take a look at the screen. Is there anything else that I think you missed out or we want me to cover again? All right, because in the afternoon session, we have enough time to cover the rest of the thing. So don't worry about time. Time is adequately enough. All right, anything else you want to ask me? Because if you have no question to ask me, I will purposely shift a bit more to the KSI, the KCX already. Can I do that? Yeah, I got half an hour to do that, so don't waste time yourself. Can I do that? Okay, so let's just ask everybody, can I text into KSI and KCX right now? Yes or no? Please key in the comment box. Yes means I continue to the KSI and KCX. No, because you want to go for lunch. Can we go through pivot? Okay. Okay. All right, I can do that, no problem. Okay. Okay, for the benefit of everybody itself, let me ask do this, yeah. Every time after I finish one topic, right, I'll ask question. Do you have any question? If you have, we stop there and we keep on revising it. Because if we move away already, then we're moving on, then we come back again. It's a bit, time consuming, yeah. Okay, never mind. Since the time is still reserved for the earlier segment, we still continue to do the pivots as request. But of course, do me a favor, guys. If you are busy doing something else at the same time, then you need to understand this. I cannot keep on repeating myself. Yeah, you need to listen for today. Okay, no worries. Okay, so let's go back to the pivot again. No worry. Let's just try and do pivot and understand this fully so we are very clear on what to do. Okay, never mind. Okay, so let me repeat myself one more time for the revision of pivot once again. Now, pivot 1 is the resistance of the market to make it very simple to understand. If it's pivot 2, it's a support level of the market. So very simple, right? So in the market itself, if this is a resistance level, if the market goes up and break it, you buy. Very simple, because by right, it should go higher. True? So if the market really break resistance and then pulls back, that means the market is resisted. So the difference in the vocabulary, yeah, the one here is how it break resistance. So break resistance go higher, right? But if you break resistance and come back down, it's called resisted. So the difference is here is a buy, here will be a sell. This one all clear? So same thing, vice versa. If this is a pivot 2, it's called a support level. If it breaks the support level and goes down, this is a sell. But if the market breaks support level and recover, it is called supported. So that is a buy. All clear? This one all clear, yeah? Just very, very simple. All right. Okay, thank you very much. So now the thing is this. Occasionally, the market will exchange position. The pivot 1 become pivot 2, the pivot 2 become pivot 1. Now, when that happens, what do we do? Don't panic. All right. Now, when the market do that, usually the market will trade within the range. So the market is going to be very easy to trade within the range for the day. But of course, if the market breaks up and goes above pivot 2, it's definitely still a buy. And same thing, if break pivot 1, it will definitely be a sell. Okay, so when the polarity exchange position is sell, right, usually the market will go sideways for the day. So it goes sideways, and then you must be very patient, or you just choose not to trade on that day when it's actually doing that. Okay, all right. Now, what if the market actually do this? It actually does this. I'll show an example now. Okay, so what if the market pivot 1 is here, pivot 2 is here, but the market opens here? Then what happens? You can see the market cannot go anywhere, no? Because you see the market got the resistance on top and it's supported below, right? It's like two magnets are trying to stretch their power to pull to the stem. But you see the market opening price is actually the middle of the P1 and P2. So you see the market, wow, very hard to go up, very hard to go down because both polarity is pulling towards them. So the market got no direction. So that's why normally you ask me, right? I like to trade when the market breaks above pivot 1 or opens above pivot 1 or break below pivot 2 or open below pivot 2. Now that is the best to trade. Very simple, very easy. But when it's the market opening price is actually, between the two pivot, right? Wow, very tough. All clear? If all clear, it's all right. Press the next number, number 26, right? Yeah. Okay, when you send me a text message, itself, right, please select everyone in the meeting. Don't select to me directly. Yeah, don't send to me directly itself. Yeah. Okay. All right. Okay, very good. Yeah. So then as now I show you so example. Let me show you this NASDAQ chart here. No S&P then. Right? You know. Okay, so this is the NASDAQ chart that happened on last Friday, last Thursday. Sorry, keep on saying the Friday. So used to that. Okay, come, everyone take a look. Can you see this right now? So this is the market, right? That basically the market cannot go above pivot 1. That means it goes up and come down. So do you notice here itself is a CCYR? Can you see that? So same thing here, the market cannot go up, right? Can you see? CCYR. So when the market can go past a pivot and pulls back, concentrate on CCYR. Can you see that? When the market hits pivot 1, comes back down, concentrate on CCYR. Clear? Okay, let me read this. So don't trade while it's between pivot, better to wait. Make sure it's open above one below OP and out of the yes. So when the market opens between the two pivots, right, usually the market will swing quite badly itself. So that's why when it trades above OP and above pivot 1, that's the best. If it trades below OP and pivot 2, it's the best. But the question will come in. But most of the time, the market opening price will trade between the pivot first. Yes, most of the time, the opening price will trade between the pivot first. So that's why when you have that, you still have to trade as per normal, but you don't expect to see a full range of things. But when the market goes above pivot 1 and above pivot 1, right? Wow. And it's above OP and pivot 1. Wow. Normally the day I will really go for it by going for the kill. So vice versa, if the market is below OP and below pivot 2, right? Remember, just sell. Any CCYR, just sell. All right. That's how you make money from the market. So the pivot to have it above and have it below is not usual. Maybe like every 10 days one time, maybe. Majority of the time, the market open between the two pivots. Okay, all clear? Okay, no worries. Okay, so what I'll do is that I will now terminate the video recording first.